Welcome back to Portfolio, everyone. And today I'm going over the 7 best consumer staples you can buy right now for your dividend portfolios. So of course the market has seen a big run up, usually driven by the tech sector. But during this time of uncertainty, where the economy still isn't fully recovered just yet, consumer staples may be a great place to find some nice value and some nice consistent dividend income. So these are companies that provide everyday products to consumers. These are the brands that we use each and every day of our lives, and these are some solid brands that really aren't going anywhere anytime soon. So I'm going to break down 7 consumer staples. These may be overlooked, some are more popular names, and these are 7 companies who all pay out dividends that are growing each and every year. And of course, during this time of uncertainty, when there's still a lot of up in the air and confusion about what's going to happen with the economy, holding some nice stable consumer companies may be a nice addition to your portfolio. So we're going to get right into the first stock, which is ticker symbol PEP, Pepsi. But before we do, as you know everyone, I am the Gen Z investor, and every single day on this channel we talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. So please like and subscribe, and let's go through the 7 best consumer staples you can buy right now for your portfolio. So the first one is Pepsi, ticker symbol PEP, currently being traded around $136 a share. On the 1-year chart, you can see they are just up shy 3%. So they did see March lows. They have slightly recovered and are still trading below that pre-pandemic high where their shares were around $147 a share. So this is a long dividend paying company who consistently has been paying out dividend income to shareholders for over 48 consecutive years. They are very close to becoming a dividend king and will reach that status in 2 years. Their current year yield is at 3%, with a payout ratio of around 76%, and they've done a great job of growing their dividend by over 8% average over the past 5 years. Pepsi owns and operates so many different brands in the snack food industry. They don't only own their soft drink, they are well diversified into a bunch of other popular snack brands that gives them more exposure to more than just the soft drink sector of the market. And this is a brand that I believe will continue to pay out that dividend for years to come. And this is a brand that I believe will continue to grow very nicely once this pandemic is over and for years to come. With regard to dividend safety, we're always going to take a look at that when evaluating each dividend paying stock on this list. They have a very safe dividend payout with a dividend safety score of 93. So this is a company that is very unlikely that they will cut that dividend anytime soon, especially when they have a 48-year dividend growth streak. It just shows that this company can weather a lot of storms. They've lived through recessions and depressions and have continued to grow their dividend through all those events. And I do believe they will continue to grow that dividend each and every year moving forward. The second consumer staple you got to take a look at today is Clorox, ticker symbol CLX. And of course, with the world we live in today, where there's a high demand for cleaning products, I think Clorox is a company that will continue to thrive. Up 40% on the 1-year chart, currently being traded around $228 a share. Of course, they provide a bunch of household cleaning products as well as any other cleaning products that are used in more industrial settings. And this is a company where health standards and cleanliness standards have only gone up, and I believe they will stay at a higher rate moving forward. That this is a company that I really do believe will benefit over the long term. They also do pay out a dividend, so although their shares are up 40% on the 1-year chart, there is some beautiful share price appreciation, but you're also getting a 1.95% dividend yield with a payout ratio of around 60%, and they've done a nice job of growing their dividend at around 6.86% average over the past 5 years, and they've been growing their dividend for 43 consecutive years, another company working towards becoming a dividend king. Their dividend payout is considered safe at 75, so another company who can sustainably pay out their dividend for years to come. One thing I want to point out with Clorox is that they have a beta of 0.31. They have a very low beta, so not a lot of price volatility with these shares. Of course, we have seen quite a nice run up over the past 12 months, but with that, in conclusion, they still are not a very volatile stock. So with these consumer staples, if you're looking for some stability within your portfolio with a nice dividend yield, Clorox is another one you might want to take a look at. Stock number 3 of the best consumer staples to buy now is a very popular holding to investors. It is Procter Gamble, ticker symbol PG, a very well diversified company who owns and operates so many different brands across different sectors of the consumer market, up close to 13% on the 1-year chart. This is another company that I do not believe will go anywhere anytime soon. They're an absolute cash cow. This company brings in tons of revenue and earnings each and every year, and they have a beautiful long-term dividend growth streak that I don't think will end anytime soon. Current yield at 2.33%, sustainable payout ratio at around 58%, They have been growing their dividend at a slower rate of only average of 3% over the past 5 years, but that 3% just meets and slightly beats inflation each and every year, so your dividend income is at least matching inflation every single year, and you're not losing money to inflation each year. And of course, they have a 64-year dividend growth history. They are a dividend king, great reliable dividend payment that I believe will continue to grow each and every year. If we take a look at their dividend safety, they have the highest dividend safety rating possible at 99, a very safe dividend, very, very unlikely that that dividend gets cut anytime in the near future. And I do believe this is a company that will continue to grow the dividend for at least the next 10 plus years. Stock number 4 is Colgate. So another very solid consumer brand, and I'm sure a lot of people use their products on a daily basis. Currently being traded at $78 a share. This is another company, of course, they're well-known toothpaste and other different brands that people use every single day of their lives. And they also is a well-known consumer brand with regard to how customers believe in the product. They have very strong customer satisfaction, and people just like using their products and actually choose their brand name over competitors. If we take a look, they are up 6.6% on the 1-year chart. This is a company that once again saw March lows, but have fully recovered and continue to grow. And this is a company that, again, with higher cleanliness standards set throughout the world, I believe this is a company that will still benefit very nicely because people are just going to take their personal health and personal cleanliness up a notch as well. With regard to dividend, currently yielding 2.26%, another payout ratio that's very sustainable at around 60% of earnings. 3-year, 3.78% dividend growth rate over the past 5 years, and they are a dividend king once again with a 57-year dividend growth streak. One thing I want to point out is all the first 4 companies on this list are all very long dividend paying companies. The lowest streak of the first 4 companies is 43 years. We had 2 dividend kings, Pepsi at a 48-year streak and Clorox at 43. These consumer brands have been around for a long time. They know how to weather depressions and recessions, and even during those tough times, they've all continued to pay out and grow their dividend each and every year, which kind of reassures you that these are the companies you may want to hold when there still is some uncertainty with the economy moving forward. With Colgate, their dividend safety rating is at 90, so another very safe dividend, another company which is very unlikely to cut that dividend anytime soon. Stock number 5, it is Walmart. So this is, of course, a little bit different. This Walmart doesn't actually make their own individual products, but they actually do sell a bulk of consumer brands to individual people and individual consumers. So I threw them in this list only because I still consider them like a consumer staple. They are such a staple of people's economy. There's a Walmart in every city across the world, especially in the United States, and Walmart continues to grow very nicely, and they've actually been benefiting from this economic slowdown because they were one of the few retailers that actually got to stay open and maintain operations because they are an essential service and they provide essential goods to customers. So Walmart is actually boosting their online and e-commerce sales as well, which is a great benefit to the company. Up 16% on the 1-year chart, currently yielding 1.63%, payout ratio around 40%, slower 5-year dividend growth average of only 2%, but once again a very strong dividend paying company with a streak of 47 consecutive years of dividend growth, another stock that is working towards becoming a dividend king and will reach that status very soon. Taking a look at dividend safety, currently ranked at 78, so they're still paying out a safe dividend that is very unlikely to be cut anytime soon, and especially with that 47-year dividend growth streak, I'm sure Walmart will do everything it can to continue to grow that dividend each and every year. Stock number 6, Hormel Foods, ticker symbol HRL, $52 a share, has seen a nice run up as of late, up 27% on the 1-year chart. This is another dividend king with a dividend growth streak of around 50 plus years. So this company has a nice current dividend yield at 1.77%, 53-year dividend growth streak. So the first 6 stocks on our list have extremely long dividend growth histories. These are some of the most stable companies to hold within a nice portfolio. They've done a beautiful job of actually growing their dividend at 16% per year. So even though you're getting a lower starting yield, they have rapidly grown that dividend each and every year over the past 5 years, and their payout ratio of 55% is very sustainable. They know how to manage their cash flow, been paying out and growing that dividend for 53 consecutive years. This is a company that I do believe will continue to pay out and grow that dividend very nicely for years to come. And with regard to dividend safety, they have the highest dividend safety rating possible. So another company where if you put some money in there, you'll collect that dividend without worry, and that dividend will grow at a nice rate year over year because this company provides products to consumers that are always in demand. The final stock on our list, the final consumer staple to take a look at and add to your portfolio if you want to bump up that section, is Kellogg's, ticker symbol K, currently around $68 a share, up 6.86% on the 12-month chart. This is another consumer brand, of course, well known for their cereals and a bunch of other, very well-known daily consumption brands. So Kellogg's is another dividend-paying company with a 3.31% dividend yield, payout ratio around 58%, and they've slowly grown the dividend at a rate of 3.53% over the past 5 years. This is the smallest dividend growth company with regard to how long their dividend history is. They've been growing that dividend 15 years each consecutively, and they will continue to pay out that dividend moving forward. And taking a quick look at their dividend safety, the lowest score on this list at 66, but still considered safe. So those are 7 consumer staple brands who are paying out nice, consistent dividends. 6 of those companies, 3 dividend kings, and 3 other companies with at least a 40-year dividend growth streak. These are companies that have consistently grown their dividends for a long period of time. They've grown them through depressions and recessions, and these are brands that have such stable operations, provide such necessities and products to consumers that are used every single day, that I believe these are brands that can add some stability to your portfolio, provide you some nice consistent income coming in, and kind of let you sleep good at night knowing that your money is invested into a strong, stable company that isn't really going anywhere anytime soon. So if you're looking to bump up your consumer staples section of your portfolio, and if that sector of the market is kind of lacking compared to the tech or the overall info tech sector, these are some companies you might want to take a look at. So thank you for watching, everyone. I'm the Gen Z Investor, and I will see you in tomorrow's video.